Welcome to Financial Ginger. I'm your host, Jacob Johnson. I'm the insurance agent that is known for answering his phone, which is a big deal. There's lots of insurance agents that don't answer a phone. You think that sounds silly, but trust me, try calling your agent, see if they answer the phone, and then call me, see what happens. It'll be totally different. Even if right now, right? I'm recording right now. We've got 8 agents in our office that all they do is answer the phone. No AI, no. Anyways, I've talked too long about it. Today, I am super excited. We have Joel Jones from Homelord. Is it Homelord Systems or just Homelord?
The company is called the Homelord, but website's Homelord System.
Homelord. That's probably why I had both in my mind. Homelord.
Yeah.
And he helps people get into house hacks, ADU build-ons into their properties, and finding great opportunities to create value out of your existing home or your new purchase. Does that sound about right?
Yeah.
And more.
Yeah. So much. Yeah. Essentially, if you feel like home ownership is impossible today, you got to learn about a strategy called house hacking, which is this whole thing about ADUs. Do you want me looking at the cameras at all?
Whatever. Do whatever. There's
okay.
mics. I look at the camera and point all the time. I don't know why I end up doing that. But yeah, there's one at me. There's one at you. There's one that's just got the whole panoramic shot. Whatever. Look at the audience. Look at me.
Okay.
Look at your toes.
Sure. I'll probably look at you the most. But yeah, anything home ownership wise, living in a property that can also generate rental income for you, that's the core purpose behind house hacking. And that's what Homelord is all about, a real estate agent that specializes in this strategy.
Yeah. And you guys have done I've seen your guys' stuff all over the place. I mean, I've connected with Justin, who's part of the Homelord system group or whatever.
You know, I'm still trying to catch up to Justin, but yeah, this year alone, if you combine our efforts, I think we're in 2025 over 22 million.
Wow.
In volume. So we're very, into
active.
Real estate, and we do all things. House hacking's the primary product service we deliver, but we also help with all kinds of investments. Like I'm working on about 20 million in multifamily right now. For
is that
next
one
year.
big deal in Layton, or that 16 unit the seller finance thing, or is that's just Justin then? He's been talking to me about that nonstop because he's so excited about it.
Yeah.
Yeah. One thing that their group do, Homelord Systems, do as well is landlords that are trying to transition out of it, or maybe you've inherited a bunch of property and you're like, I don't want to be a landlord. It's, hey, finding creative ways for you to get paid as someone who owns property that's trying to get rid of it. It's like, hey, I'm trying to find families that want to buy, or maybe whatever it is. It's like, cool, you guys definitely can help people.
Yeah, because of our backgrounds, because when you house hack, if you're living upstairs and rent your basement, 99% of the time, you're going to self-manage. It just makes sense. Save the money. You're right there. It's not that hard, right? But there's a point in your life where you're like, you know what? I want to move on. I want to either hire a property manager or sell. So naturally, we get a lot of leads that are like, hey, I own this investment, rental, whatever, don't want to deal with it anymore. Help me sell it. Help me offload it to a third-party property manager. Basically anything people need. Like if we can't do it, we will connect them with someone that can do it for them.
That's actually part of the reason I did this podcast is I have people all the time that are, hey, Jacob, I need someone for this. Do you do that? Hey, you do my insurance and I love it. Do you do life insurance? No, I don't do life insurance. Hey, I need something for this. And so I just I built this list, right, of people. And I'm like, wait, I should just podcast and talk to those people and show the people what they are. Because I've already had people call me and be like, hey, Sam was on your podcast. Sam Jones, he was the financial planner that was on. And I had 2 people already.
My brother's name is Sam Jones. And so I was just like, he's not a financial planner, at least from what I know. He was on the podcast a couple weeks ago. And people are just like, hey, I know his info is somewhere in the comments or in the what, but I still want to talk to you, Jacob. Like, what do you think about Sam? And I'm like, oh my gosh, well, we did this and this and this and this and this and this. Here's his phone number. Call him. Right. So it's great because this is providing opportunities for people to find services they need. And I get to talk to cool people and do cool things. And I've done that with you. I said, Jacob, I need a guy who can do this. And you connected me with a few.
Yes. Yeah. I remember. We recently did that online course about, like a little webinar where we were talking about the value and how to get into it. And there was a couple of people that were on that call that, were just like, oh, I didn't think that homeownership was possible. Cause you look at a lot of homes and you're thinking, oh, if I buy a house, I'm going to have a $4,000, $5,000 a month mortgage payment. Well, if you're renting somewhere for $1,500 right now and you're like, or maybe $2,000 a month, just like that seems unattainable. But it's like, oh yeah, if I can house hack, buy a place that has a basement and I get a tenant that's paying $1,500 to $2,000 like I was, oh, suddenly it's only costing me $2,000 a month to live in a house. And you can change that later, right? Or naturally over the next couple of years as rents go up, that might make it cheaper for you to live in a house. Or it's just like people don't realize that's a possibility. Yeah. And you guys help people see that's a possibility. Let's find deals. Let's find options. Where do you want to live?
Yeah, there's so many numbers that you can go over to show renting versus owning, home ownership today. But I would say at the core, the sentiment is I work hard, I have a great job, yet home ownership still feels so impossible. Those are the kind of people we are really trying to help, because once they understand the vision of, okay, well, if you're paying, I'll say average rent is closer to $2,000 a month. Yeah. Which is great. There's nothing wrong with renting, but people have a goal to be homeowners for a lot of reasons. I know for me, I want to build a rental portfolio that can pay me passive income by the time I retire. That's my goal. For most people, I know it's a big wealth tool, so I want to get in some way or somehow. Utah has unfortunately become one of the most unaffordable places to live, and incomes aren't increasing as fast. Yeah, they're not keeping up. So you're kind of stuck with buying a condo, a townhome, which again, if that's what you want to do,
about three
great.
of them.
Yeah. Like, and you know, my first investment in 2019, it was a condo, but at that time I didn't know any better.
Yeah.
Right. But once we educate people on like, hey, well, what you actually truly want is a single family home, because for a lot of people in Utah, they have kids. You get a yard. Yes. And townhomes, condos today, you don't get a yard. You don't get a yard, but they can't afford the $4,000 mortgage payment unless you can have someone renting a portion of your house, a detached ADU or the basement, whatever, to help offset that cost. And that's what we love doing, is helping people understand the vision and then actually execute it. And that's, I would say, probably like the most rewarding part about like what Justin and I do is, you know, helping these couples and families not just achieve home ownership, but do it in such a smart way where they get so much more than they thought was possible.
Yeah. Yeah. I really like the idea because, right, there's a lot of people that are like, man, I hate paying rent. You know, like, I want to fire my landlord. I don't want to deal with that. It's like, then find a way to do it. And I've seen, you know, I've seen you guys meet with people that aren't even close to it's like, hey, but knowing a roadmap to get where you need to go, right? Like maybe it's, hey, you've got some debt that you need to get rid of first, and you need to save up this much as a down payment, right? Like this is the amount you need. Okay, that now you created a goal for someone. Or hey, maybe you're not aware of, right? Like I talked with another realtor recently, and he was telling me it's like, oh, there's an incentive that Utah has for first-time home buyers. It's like $20,000.
Yep.
And that doesn't have to be paid off until you sell the house, or until you die if you never sell the house, right? Or when that ownership
or it's
transfers.
forgiven depending on the program.
Yeah, yeah. And so it's like, if you're not aware, talking to someone saying, hey, I want to become a homeowner. How can you make that happen? And a lot of people are scared because they just think it's just not possible for me. Yep. So I just encourage anyone that's listening that thinks I can't buy a house, right? Write a comment right now and says, I can be a homeowner. Say it with me. Yeah. I can be a homeowner.
You can't.
There we go. Hopefully a few people of you chanted that with us too.
And I think you bring up a good point. And, you know, when I was first getting into real estate, I did not have a great experience with my real estate agent. We call it commission breath, just very, very pushy, not very helpful. And kind of what you pointed out is we work with people in all stages. Maybe they're ready now, maybe they're ready 2 years from now. I like to tell people, look, if you're going to spend $500,000 to $750,000, that's a big investment. Not only do you need to like plan and budget for that, but like you need a team behind you that can like paint a picture that includes insurance too. Like insurance is part of owning a home. Yeah. And if you don't got that team to help you execute it right, then you're just not going to have the same result. So if your goal is to be a homeowner, partner with someone who does this full time, who knows people that can get you everything you need and paint that picture for you. And if you're not able to achieve homeownership yet, then we can make a plan to help you get there. Like it's it's not that hard.
Yeah. Well, and there's a lot of things that people don't think about, right? Like that having connections is like, oh, what about property inspections, right? Like my sister, she bought a over 100-year-old house in Provo, right? And obviously there's a lot of older houses in Provo.
Sure.
And they were able to negotiate the roof to be replaced by the seller, right? It was a really old roof, and having the roof paid for by them made their insurance cheaper. Right? Because especially over the last year, since that August of 2024, that hailstorm event that happened, largest claim event in the history of homeowners insurance in Utah. It was over $1 billion. It was like $1.3 billion of damage estimated. And there's so many roofs. And after that, a lot of insurance companies in Utah, I've actually had 4 companies leave the state entirely. Like if you ever had, they're not super well-known companies, but they were large companies. Kemper's a huge insurance company, and they just pulled out of Utah completely. Everyone that's with Kemper has been non-renewed by now.
Which is hilarious because that was like once, like when was the last time we had a hailstorm?
Yeah.
Right. So it's like one bad event happened and they're like, see ya, not profitable.
Yep. State Auto, they pulled out before the hailstorm even happened. They left the state completely. In some states, State Auto was known as Meridian. Depending on the state, their registration is a little bit different. And I mean, some people might not have heard, they're not big advertising companies like Geico or Progressive, right? That advertise on TV all day.
Yeah.
But these are huge insurance companies. And when you create a vacuum like that of, $200 or $300 million of insurance premium being non-renewed, other insurance companies are like, why are we having such a huge uptick of people doing quotes? That's actually a risk indicator of them.
Really?
When more people are looking for insurance, usually it means it's more likely that those people are higher risk situations. So some insurance carriers, you can indicate specifically they're being non-renewed by their previous carrier, and that can help fix the rates to be lower. But right, who would have thought of that, right? Like, so being someone that's helping, knowing those sort of situations can help navigate, hey, if I can negotiate a new roof, their insurance is going to be cheaper. Some insurance companies, if your roof's over 20 years old, they won't even offer you a quote. They'll say you're ineligible, right? At the time of go. Now, if you buy and then your roof gets older, they're fine. But they're like, we just don't want to take the risk of an older roof. Not that 20-year-olds is super old for a roof, but that's how things have changed in Utah. So like you mentioned, having someone that's full-time involved, that has connections with loan officers, that has connections with roofers, that has connections with home inspectors, that have connections with good insurance agents, can proactively figure those things out. Like one I was looking at for Justin recently, there was one that they thought was going to be in an HOA. And I'm like, oh, the insurance on that's like $400 a year. But then at last minute, they found out right before they closed, actually there isn't an HOA that covers the houses. There's an HOA for like paying for snow removal, but it doesn't cover the houses. So suddenly you now need all the coverage to cover the building, not just the interior, right? You would need an HOA. And suddenly the insurance is like $1,100 a year, right? It's like 3 times expensive. And so knowing that beforehand, it's like, oh, don't expect $30 a month to be your cost. It's now going to be like $90 a month. It's important to figure that out before in your affordability and all that. So anyways, I've rambled a lot.
I think I know what properties you're talking about.
It's those Layton ones or West Jordan ones, and there's 16 of them.
I know what you're talking about.
That's so cool. He called me yesterday saying, hey, do you want to buy one of them? And I'm like, I wish I could. I just did a bunch of maneuvers and all of that. And I'm actually in the middle of a 1031 exchange.
Oh, you are?
Yeah, okay. I'm selling the first property I ever bought to buy 2 more condos in like April when they're finished. And I'm super, super stoked about that.
Hey, if you're going to buy a condo, make sure it's a new build.
Yes. Yep. New builds are better.
If you can.
Yeah. But see, and so one thing that I want to bring up to anyone that's like, it can't happen. There's no way I can buy a house. It can't hurt to just talk. Just to talk, because right, making that roadmap. But the other thing that is think about 10 years ago, right? What was rent like 10 years ago, right? What would have the house you're looking at have cost if you'd bought it 10 years ago? Now, obviously, some people that are listening are like, okay, I'm 25. 10 years ago, I was 15. I couldn't have bought a house 10 years ago. Okay, well, I'm 31. I could have potentially bought a house 10 years ago, and I bought my first place 6 years ago, right? And I'm like, the mortgage on that place, $1,000, right? Most people that are buying similar condos nowadays, your mortgage payment ain't $1,000. I know people that are paying like $2,100, $2,200 before their HOA fees, which are $200 a month for some of these condos. And it's like, you're not spending $2,500 a month.
5% down, folks. Yeah, it's a little intimidating.
Yeah, it is. It is. So, but the point is that I want to make is what's going to be like in 10 years. Utah's not getting smaller. We're building as fast as we can, and we still don't have the housing supply, and the jobs are here, and people like living here. People are really nice in Utah. Utah's a great place to live. I know people joke about Utah and they're like, "Oh, Utah's weird" or whatever, and I'm like, so we love it. We're weird and we're proud of it.
Yeah, Utah. I mean, I like to back things up with data. So if you look at the housing supply, population growth, for example, Eagle Mountain, Saratoga, and Lehigh in Utah County are good examples. Like some of the most amount of building permits and development in the entire state, all in this like tiny radius. But everywhere in Utah's just been exploding. And because we deal so much with rentals, we've also seen the influx of what's currently happening with the rental market and how rents are softening a bit. But even with the softening, everything is still expensive. Yeah. You know, I always joke that Utah is a future California. Just look on the mountains. We have more homes being built there. And eventually, like, that's what it's going to look like. Come Olympics, come the 2034 Olympics, if you do not own real estate in Utah, chances are, unless you get help from family, you'll never be able to buy unless you spend a decade or more saving up. Mainly because I feel like personally, townhome, like an entry-level townhome, will be closer to $550 to $600K in the Valley. Like I know that sounds insane, but where it's popular to live, there's just more competition.
I mean, I think there are townhomes already listed at that much I'm thinking of Gardner Point specifically, but I'm pretty sure Gardner Point has townhomes that are listed at 600 right now.
So you have more like luxury townhomes. So Gardner Point, which is in Lehigh, there's like entry-level townhome around 1,400 square feet. And then you get into the ones with unfinished basements around 2,100. Those are about 480. And then Gardner Point has really nice townhomes where you get into the 500 to 550K range.
You're saying that the entry-level ones by the Olympics in 2034 are likely to be 600.
550 to 600 is my guess. And then like single family will just be insane.
Or hear this. My first little 1,300 square foot condo I bought, I paid $230,000 for.
Yeah.
Okay. If you could buy any condo in Utah for $230,000 right now.
Fun fact, there is a place you can.
Where?
Eagle Mountain.
Oh, yeah. Oh, yeah. There are a few out there.
Very few. Yeah. But like you're in the depths of Eagle Mountain.
Yeah. You're like basically in Cedar Fort at that point. You're just so far out there. Nothing wrong with Cedar Fort. I have friends that live in Cedar Fort. Great place. It's just, if you're commuting for work, it's going to be a commute. That's actually part of the reason I moved out of Saratoga Springs. I was like 50 feet from the border of Eagle Mountain, where I lived. So everyone will know exactly where I lived because there's only like one community right there on the border. But when I first moved out there, 6 years ago, it was 2021. I don't know, whatever, right when I got married. So 5 years ago, there we go. Yep. It would take me 20 minutes to get to American Fork for work, 20 minutes to get back. By the time I moved, only 10 months later, it would take me 30 to 40 minutes to drive to American Fork. And then it would take me over an hour to get home. Because Redwood Road over there is just so busy because there's so much construction. And I've gone back there because I visit my tenants, right, and check on the place and whatnot. Yep. And they've built 8, 9, 10 more communities over there. It's booming.
Yeah, high density housing is newer to Utah. The best way to look at it is east side of the freeway. Not high density.
We got our
West side, insanely high density housing, like stark difference between the two. But that's just the new norm. You have builders like Edge, like right now they keep changing it, but like
it's 9% right now.
9 to 10% consent. It's not as sexy as it sounds.
No.
I had a client look at the townhomes in Wildflower. Yes, it covers all your closing costs. Yes, it can get you a 3-1 buy down, but once you add in the townhome HOA fees, there were like
it's like 260 for
200 change. Yes, like super high. Yeah. Like even with a 3-1 buy down, which is a temporary interest rate buy down over a 3-year period, the starting payment was still at like $2,300, and you would finish at $3,000.
Yeah.
So unless they like Lennar, they have like an interest rate incentive, which no one can beat them. I would say
D.R. Horton had one that was 6.375. Or sorry,
7.6 ARM. It's
something like that.
Amortized at that, but very similar to Lennar. Like for the first 6 years or so, it was like 3.99.
That's it, 3.99
or 4.99. Amazing.
Yeah.
Like great. And that's how a lot of people.
And within 7 years, you can refinance potentially if you need to.
Yeah, most people don't even live in a home for 7 years anymore. So there's all these different things you can do. But what we like to tell people is if you're willing to sacrifice and view homeownership as a stepping stone, like the first house you buy shouldn't be your forever home.
No.
Like get the space you need, get the yard, rent the basement, save, and eventually you'll be able to get what you really want.
Yeah.
And that's again more forward thinking, but we just try to start with step one. Let's just achieve homeownership. Yeah, like yes, let's show you how it's possible. We'll go over the strategy and how it works, and then you'll be able to achieve all those goals that you've been wanting to and thinking about. And I just want to go back to the point you brought up earlier of there's a lot of people who are like, well, anyone who bought before COVID, they had it so much easier, whatever. Well, back then, $50 was a ton of money. I just want to remind people.
Yes. Money is different now than it was 10 years ago.
And yes, our grandparents, it feels like they bought a house for like a box of raisins or whatever.
Box of raisins.
But like my grandpa was scrubbing the BYU tennis courts for 75 cents an hour.
Yep.
So if you average it out.
Money's different.
Yeah, over time, like housing it always feels expensive. And I have 2 kids too, and I think about like their future and ability to buy a house. At the end of the day, you just got to plan for it and do the best you can.
Yeah, make a
plan. Don't let that be an excuse that stops you from achieving something that is very possible.
Yeah.
That's what I'm trying to get at.
Yeah, it's always going to seem like the world's against you. So embrace it. Fight it. Punch the world in the face. I will be a homeowner.
No, really though. That's just life, right? In Utah, we have a lot of hardworking people.
Very, yeah.
And that's why I like to say they're so, like, it's crazy to me. Like a lot of our clients are tech people, very successful, making 75 to 200K a year, like wide range of people.
Yeah.
But most of them can only put 3 to 5% down. And it's just insane. Like, I don't blame them. It's like they've done everything right in life. They went to school, they got their bachelor's degree, they got a master's degree, they're working full time, they're having a family. Like they were told they were supposed to.
They've got health insurance.
They got health insurance. They got everything. Yet they feel like their parents, they're just this whole idea of like, dang, I feel like I should be a homeowner already. And then they feel like a failure because, a lot of people they know became homeowners between ages 22 to 27, I would say. But we're in an average homeowner age right now is 38, just to put things into perspective.
Yeah.
So
it's a great perspective.
Yeah, dude. I mean, crazy times.
Pardon getting a little bit into mental health here. I think a healthier mindset that I struggle with this. Like, I'm not saying this because Jacob Johnson is great at this. Like, you can ask anyone that knows me. I struggle with this all the time, but it is so much better to compare yourself to yourself a year ago, right? Mm-hmm. Like, oh, am I making more money this year than I made last year? Have I saved towards buying my first house? Am I closer to that goal, right? Because I look at it, dude, I have a couple of friends that like are business owners that literally make like it's ridiculous how much money some of these people make.
Amount of money,
right?
Yeah.
Like, well, I have a friend who called me up because he bought a 3-plex with cash.
Yeah.
Right. Like, I know people that make money, and I shouldn't compare myself to them because we're totally different people, right? I have my goals, and I'm making good money and all that sort of stuff, right? But you will never feel happy comparing yourself to the people around you. Right. Or it's just an ego stroke. Oh, I make more money than my friend that is working a minimum wage job. I'm like, is that really a positive way to be like, I'm better than someone? Like, you're not better than someone because you make more money than them. Right. You're not better than someone because whatever your political views or your social views or economic, it's getting a little bit off topic, going a lot of bit off topic. But right. Like, compare yourself to where you were at a year ago. Right. Like 7 years ago, I was considering suicide. I'm better than that now. Like, no matter where I go in life, I'm better than that point, and I should be grateful, And so I think doing that, and then that can be more powerful of a tool to take action. hey, I'm going to call Joel and talk to him about how can I become a homeowner, right? I'm going to call, I've had many real estate people. There's a lot of great people, right? Like
there's a lot of us out there.
Yeah. Utah has great people that want to help, right? Hard workers and build that team that's going to help you figure it out. Right. I don't even care if I'm your insurance agent when you buy a house, right? Like I want you to win and I'm going to be excited for you when that happens. So make it happen.
Yeah. There's this, and I deal with this too. Like if you have a friend that buys a home, you're always like, you want to like look it up on Zillow.
See how much it's worth.
Yeah. Yeah, exactly.
He has to
you're
making
like,
this much money to buy that house.
Like, oh, they're so well off or whatever. And there's this like sense of well-being associated with being a homeowner. And yes and no. I know a lot of people who are house poor. I know a lot of people who are well off, but yeah, it's kind of like this weird mindset of like, you bought a house. How'd you do it? Mm-hmm. But again, like the fun part about if you house hack though, that's a fun conversation to have because people are like, oh my gosh, you bought a house? Like, yeah. And then they look it up naturally like, oh my gosh, how'd you do it? And then they learn about how like you rented the basement or whatever. And they're like, wait, your landlord's at the same time. And it just, people's minds are just blown when they learn about like how you did it. It's fun.
It is fun. Well, and just a little bit, because people, so I have some from my friends, people that looked at me and they're like, Jacob, you got 3 houses at 31. 2 of them are rentals. It's like, how? And I'm like, okay, you want to hear the true, I haven't told this to like many, I have a few people that know this. I lived in my parents' basement for a year and a half after I graduated college, right? And that was when I was suicidal because I couldn't find a job after I graduated. Like there's nothing sexy about that. Like it was terrible. I couldn't find a job. I was suicidal. In fact, I just pulled up pictures the other day and I found pictures. The one thing that kept me alive was running. I ran a half marathon that year. First time I ever run. I ran it in like an hour and 42 minutes. And I'm like, how did I run a half marathon that
That's
fast?
fast.
Like, I feel like that's fast for me.
That's fast in general.
Yeah.
That's really fast.
I'm actually going to run a half marathon in 2026, October. I'm saying it to everyone now. I'm running a half marathon. I will talk about it on the podcast when it happens. 7 years since then. But right, so I was living in my parents' house, saving every dollar I could. I bought a car in cash because I was literally driving an old crappy Pontiac Bonneville that didn't have an AC unit that was working, that I borrowed from my parents to drive to work, living in their basement when I finally did get a job after I ran the half marathon. Yeah. And I saved every penny, bought a car in cash, a Prius. It was branded and salvaged. I think it had been totaled twice, right? And it was great. The mechanic said it was good condition, but I got it really cheap for that. I think I paid like $6,000 or something, right? And I drove that car and saved every penny. And then right when I met my wife, I started looking for a house and I bought my first property and I only ended up putting like $7,000 down on that property. And my uncle, who's a real estate agent, like was because I'm his nephew, right? He was like, hey, Jacob, like, I know you're trying to buy your first house. I will give you back some of my commission to make it easier for you. Like I had every silver spoon to my mouth possible, living with my parents with cheap affordability. Like I was eating their food. You know what I mean? Like, right. Like, and I recognize the whatever you want to call it, privilege, right? Like, but there were sacrifices. I could have gone and rented somewhere and spent money, right? Like, and I probably should have. Probably would have been better for my mental health. I love my parents. They're great people, best parents anyone could ask for. But right, living with your parents when you're 24 years old isn't glamorous and sexy, even if you're like, I'm saving to buy a house, right? So all these things that were terrible or not terrible, I don't know, depending on how you look at it, I should be grateful, and I am. Anyways, so that's a little background of how I ended up in my first house, if that makes any sense at all. Like whatever your circumstances are.
No, that you bring up a good point, and all for people that are listening, just to give you context, homeownership, it is so expensive today that people are buying homes differently. So you have a lot of people living with family. We have people who live in people's homes that are on missions that allows them to save money. But one of the most common trends that has absolutely blown my mind is a lot of first-time home buyers are getting an early inheritance from their parents or grandparents. It's called gift funds, which basically covers their down payment, whether it's 5% to 20%. Because they want their kids to get in now before it's too late. And I think it makes sense. the impact that $50,000 to $100,000 will have on their children's lives now versus 20 years from now when they die. Oh my gosh. Like
so different.
But not everyone has a parent or grandparent that is willing to gift them these kinds of funds. And then also we have a ton of outside money coming into Utah. Like we always bag on the Californians, but
I'm a Californian.
the reality is
not really. I moved here when I was 4 months old. Anyway, sorry. Outside money.
Outside money where, there it's a lot more expensive coming here. They can afford it. But that's why for people who don't have those resources, who are still working their tails off, it still feels so out of reach because in truth, you're competing against people who are in just a lot stronger position than you. Doesn't mean it's impossible, but give yourself some grace.
Yes, give yourself grace.
It's okay. Again, you can still do it, but there are some other people who are able to do it because they've been enabled by others.
Yeah. Or they might be used to it too, right? Like I have a guy that we do insurance for him, and this was a couple of years back, but he got hired by a tech company, and part of the job requirement it was a startup, right? And he was like the CFO or something, being paid really well, but it was like, you need to move to San Francisco. You need to be within 15 minutes of this office because we want you in office and all that, right? It was part of the contract. So they rented their house in Salt Lake City, right? Great money. It was like $4,000 a month or $4,500 a month. Like, right? It's a really nice house. Probably more expensive now, but anyways. And they went to California. The cheapest thing they could find within 15 minutes of that office was a 1960s brick 2-bedroom, 1-bath, and the rent was almost $8,000 a month. $8,000 a month to rent a 2-bedroom, 1-bathroom.
I managed homes in LA and San Francisco.
Yeah.
That's unfortunately normal.
Yeah, right. And so if someone's moving from San Francisco, right, and they're used to paying that type of rent or living with, right, they've got 2 families in that or whatever, however people make it work there. Utah, we're not used to making it work that way. Right. And we've not had to. And it's not, right. And I don't want to say it is good or bad. I want to say this is reality. This is the reality we're in. How are you going to move forward? Right. Build a team. Talk to Joel. Find those people to make the game plan to get there. Right. Figure out what you need to do to get there. And maybe that's part of it. Right. Maybe part of it is talking to your parents or grandparents or whatnot. It's like, hey, are you planning to leave me money when you die? Is there like, right? Can't hurt to have the conversation, especially if you know they're well doing and they're planning on it. Like I know a lot of grandparents that are like, yeah, I'm planning to leave money to my kids and my grandkids. Hey, this would be super beneficial if I can get in a house now. That's way, especially because housing will go up in value and all this stuff. It's like, that might be worth more than the inheritance you would leave me in 20 years.
What's crazy is when we have a lot of clients inform their families, they're like, yeah, I'm actually looking to buy a home. Without fail, their parents and the grandparents, they all agree that housing is astronomically more expensive from when they bought. And because of that, they have a lot of empathy, and that opens the door to the conversation. I've always been a big fan of just having that frank conversation up front, because sometimes what happens is we have clients who are actually going through the process. They get qualified, like, we know what they can get, and then family steps in halfway through the process, which completely changes what's possible. So it's better to know up front, kind of like, hey, can I get help here? But I do understand for some people that is an awkward conversation to have to be like, hey, can I cash in a little bit here, or can I get a little bit of help? But I've just been so happy to see how many of our clients have actually received a positive reaction and actual support in terms of a down payment assistance.
And that's, have you ever like coached someone on how to ask? That might be interesting.
Not really.
That do that? Or it's just, hey,
it's most of it's just like, hey, you're probably already telling people you're looking at buying a home, and you're going to have to explain to them this whole house hack strategy.
Yep.
And naturally, when it comes up with your parents or grandparents, if the opportunity presents itself, you may just want to probe a little bit, be like, hey, I'm just curious, no pressure here. Obviously, if you're able to help me out in some way, shape, or form, call it an early inheritance or whatever you want, let me know. I'd love to have that conversation with you. That's typically how it goes. Or the grandparents or parents straight up just offer it.
Yeah.
So we've seen a mix of everything, but I would say probably 50% of our clients have that happen in some way, shape, or form. And then the other half are just able to do it on their own.
Yeah. And I know that there are, right, like rules. I know some people have been like, oh, if I give my kids money to buy, like, what about the tax implications? I know there's rules like that. I'm like, there are gifting laws that allow you to do that.
There are, but unless you're going to make like 30 million plus when you or when you die to give that, then you don't really need to worry about it. You don't need to worry about it. There sometimes is like a little form, just talk to your tax people about it. Not that this is the most important thing to talk about here, but just mentioning that, like, there's ways you can write it in and be like, hey, I've done this gifting. You're going to be fine. You're totally fine to do that. Yeah, there's gift funds. You got to source it. It's complex. So anyways, we won't bore people with the legalities behind the gift funds, but it is an option. But there's also like 10 other options to help you become a homeowner. You just need to pick which path. There's even a plan where you can get solar panels on your house and they'll give you like a $10,000 credit at closing for the down payment. Like, that's a new program that's going around.
Wow.
Haven't done it yet. I'm still a little sus about it.
Yeah.
But man, like, everyone is trying to help people that want to become homeowners do it in the craziest of ways. So you just,
especially when you look at, right, like we mentioned earlier, right? Okay, maybe there's a gifting option. Maybe it's a plan where you need to budget in a certain way to save up a little bit more money and you're closer than you'd think, right? Like, I didn't realize when I bought my first place, I only needed like $7,000 down. It was probably more like 13 before my uncle helped me, but right. I'm like, that wasn't as much as I thought it was going to be. Because I'm thinking, oh, I didn't know it very well, but I thought I needed 10%. I'm like, if I'm buying a $230, I'm like, I need $23,000. I was completely wrong.
Well, my favorite, like, whenever people come to us like, hey, new to this, like, help me understand, you need to realize that when you buy a home, there's four main things. There's in your mortgage payment, principal and interest, which is basically the loan from the bank. And then you have the insurance part that covers your house. And then you have taxes. If you don't put 20% down on a house, then there's a fifth one that enters, and that's called PMI, called private mortgage insurance, because you don't have enough equity in the home yet. Yeah, but I think
it's the only insurance you'll ever buy that doesn't help you at all. It's only for the mortgage company.
Yeah, it's not a ton of money, but it's one of those things that's like, oh, this is the cost of home ownership, and I didn't budget for that. And then my favorite thing, which isn't much of a problem today because we negotiate with sellers to cover this cost in a buyer's market, but like loan costs. Like,
yes,
you have a loan officer.
Realize the loan cost.
That's like $6,000 to $12,000. People don't plan for it. Again, today, like 99% of the time, the seller covers that completely because we negotiate that in a seller concession. But most people are like, oh, like, outside of my down payment, I didn't know I had to pay for.
I've got these costs or sometimes, especially with new construction, I've seen programs where sometimes the lender, the builder, because of the relationship with the lender, they'll allow you to wrap those costs into the loan. So you're like, oh, I was paying $419,000 for this house. I'm actually paying $427,000 or $430,000. Like, why am I paying more? Oh, they're wrapping that into your loan costs, those closing costs, some of those. And there's a lot of things you can ask, and having a good agent who knows some of those possibilities can help.
Yeah, buying a home is so much more than just going on Zillow and browsing, which is very fun, by the way. I totally get it. It's addicting.
I was looking at houses in Kansas and Arkansas and Alabama, and I'm like, these are so cheap. I can get 27 acres for $130,000. Anyways.
Yeah, it's fun to fantasize of
maybe
like
that's the
what's
answer.
out
Move to
there.
Tennessee or Alabama.
I thought about it, but I like.
We love Utah. I'll be here till the day I die, probably. I like it.
But the actual execution that's the whole reason why, the real estate agent career exists, because someone needs to help you navigate through all the hoops, give you the team, insurance people, escrow, title, and it's a long list. Negotiate on your behalf, because if it was that easy, there would be no need for real estate agents. So
yep.
And another thing that I think people don't realize too is usually it costs you nothing to work with a real estate agent. Because this year's a good example. Like, my clients never had to pay me a penny. The seller always paid my fee. Sometimes sellers don't pay the buyer agent, but in this market is extremely rare.
It's common.
So yeah, it's it's kind of nice to work with someone with a ton of expertise and it didn't cost you anything.
Yeah.
So just keep that in mind as you're
Even
shopping
better,
around.
I had someone ask me about insurance the other day and they're like, oh, how much does it cost to use you? And I'm like, it doesn't cost you anything. It's like, oh, but isn't there like a broker fee or something involved? And I'm like, no, with insurance, broker fees are unlawful in Utah for standard insurance. I mean, sometimes like certain types of flood insurance, earthquake, there can be broker fees or whatnot, or super specialized type stuff. But your standard auto and home insurance, there's no cost. Like going to me versus going online, it's not going to be a different rate using an agent, right? Like what's real is Progressive and Geico, their average like customer acquisition fee is like 20 to 26%. So, right. So when they're making $100, they're spending 26 of it to get you as a client. So most of the time they pay insurance agents somewhere between 8 and 15% commission, depending on the type of product and the quality of business. And there's all sorts of rules. And if it's bundled, sometimes they pay you higher or whatnot. But it's like, paying me 10% commission is way cheaper than them spending 26% of their revenue or profit on trying to get more clients. Like they love brokers because it's theoretically cheaper for them than it is to find and advertise to you, right? That's why some of those huge companies I mentioned earlier, like State Auto and Kemper and trying to think of some of the not as well-known names, Dairyland, like these people they're huge companies. No one's heard of them because they don't advertise. They just use brokers because they know that that's cheaper than what Geico and Progressive do. Not that Geico, I'm actually agents for Geico and Progressive, in addition to the other companies I work with, Travelers and Bear River Mutual and Nationwide and Allstate and blah, 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 blah. And yes, I am an Allstate agent. I know a lot of people are like, Allstate, they only have captive agents. I'm like, they've got some brokers too, and I'm one of them.
Okay, very cool.
So it's free. It's free to use. And that's cool to know that in this market. It's oftentimes free.
I mean, there's a lot of businesses. Yeah, it's nice. It's not like, oh, like upfront it's going to cost you this much. It's no, like, because like people reward us for bringing them leads. That's really what it is. It's the lead generation for them, and the benefit for us is we don't have to charge the client. People just reward us for bringing them business.
That's cool.
Again, like I just think back to when I had my first real estate experience, and man, I just wish someone would have sat down with me to be like, this is buying a home from A to Z. Here's my role. Here's your role. Here's all the things and people you need to know. No, like literally
tell us more about that. I want to hear more about this if you want to go into it.
Yeah. So I was like 22, 23, married in Provo. Like, so this is when single family homes
is like this.
Yeah, I know. Single family homes were like $215 at the time.
Oh my gosh.
Oh, it felt so expensive though. Again, I
hate you and my older brother because you guys both were in that age group.
I was making $45,000 a year, right? Like recent grad, all that kind of stuff.
So homes were only like 5x your income.
Yes. However you look at it, but my whole family had been in real estate. So I was just like, you know what? Like, I want to start early. I want to get in it. Like, why not? And so to look at homes and do all that stuff, I needed an agent. I forgot how. I think it was like through Redfin or something. Oh, yeah. So again, I'm not a big fan of Zillow agents or Redfin agents just personally because they are discount brokerages. And fun fact, if you ever work with a Zillow agent, if you do buy a home with them, like 40% of whatever they make goes right back to Zillow.
Oh, wow.
Because Zillow's like the Legion. Anyways, point aside, he was professional. He's the classic like wore suit and everything. Nice guy. But it was purely like, let's go look at homes, make offers. I had no idea what I was pre-qualified for. I didn't know what an inspection was.
You didn't have a pre-qualification?
I mean, maybe he never told me about it.
Oh my gosh.
I didn't know I had to pay for an inspection. I had no idea about taxes, insurance, escrow. I just had this idea of there's like this magical monthly number that I have to pay. I didn't budget for any kind of money. Anyways, we had just gone through this process a few times to the point where like I just felt like I had been so misguided or like not given the proper preparation that we're like, you know what, we're done. And so fast forward 7 years later to like what the business is today. It's very important for us to educate our clients beyond just touring homes because it's such a big decision. You need to like understand the big picture of what you're getting into. So customer experience, the customer journey, it's just very important to me because I lived through a bad one with an agent and I made it a priority to make sure that our customers don't have that experience that I did.
Love it. It's a call to action right there. Leave a comment with something you wish real estate agents did or would do, or maybe didn't do. Like leave a comment. Tell Joel and Jacob what you think.
Bag on them. I've seen it all. There's a lot of, this is people can hate on me all they want. It is what it is. I would say 75% of agents do not deliver a good value proposition.
Okay.
I'm not trying to pick on your uncle, but like this is a good example. Like if it is family, the thing that drives me up the wall is it's a part-time agent who does 1 to 2 deals a year. You are purely using them to provide them a source of income, not for the value they will provide to get you the outcome you want. That is just bad.
Yeah, like, I can see that's frustrating.
Again, if I was going to drop $500,000 on something, well, I said your uncle.
Yeah.
There's some uncles that do this full time.
You didn't want to offend me if that was my uncle.
Yeah, like I'll give this example. I got called yesterday. Like this is a real example from yesterday, from family who is currently represented by another agent that they are using them because it was a guilt trip of like, oh, you're a friend, we'll use you.
Oh, geez.
But they're calling me for help to run numbers on a deal, to know how to negotiate. That is a prime example of the value proposition from the agent was not there. And that's why like you should be very picky with who you work with. And I think the easiest way to filter that out is, are you a full-time or part-time agent? Nothing is part-time agents per se, but it's like, if you're a full-time agent, you're in the weeds more. It's just more experience, a higher probability of having success.
Well, here's something that I recommend. And if anyone listened to a couple episodes ago, Quick Quality Plumbing, Jared Osler was on, and he always tells people, even clients that have used him for years, every time he goes out to a job, it's like, get 3 opinions. Get 3 estimates. Have 2 other plumbers come out here.
Yeah, shop around.
I've been your plumber for 10 years. I've done everything for you, but still, like, just want to tell you, I recommend you get 2 other people to come out and look at me. Right? Like when I bought my Prius, I had 3 mechanics look at that car because it'd been totaled twice. And 2 of them, nothing wrong. Third one, it looks like there's an aftermarket bumper because it had been an aftermarket bumper. And he's like, the electric battery in the back looks like it's a little bit faulty. It might die at 60, 70,000 miles. It should last to 100, but yours probably won't last that long.
Yeah.
It died at like 70, or no, it was 80,000 when he told me. It died like on the dot. It was like 80,002 miles when it like all the lights, it's like the starter, because Priuses have like a starter battery in the back that's separate from your normal car battery. And so that starter battery died in the car when it started. It's almost like a lawnmower type battery. It's like $500. So I wasn't worried about it when he told me this might be a problem in 20,000 miles. And it was exactly right. Like get 3 opinions. They might see something someone misses, or maybe someone's being trained and they just miss something, right? No one's trying to be evil or terrible or whatnot, right? But people make mistakes. Or get a second opinion on insurance. I had this happen just last week. Someone called me and asked for a quote. I sent him a quote and they're like, why is your quote expensive? I'm like, okay, well, what does that mean? He sent me a quote from the same insurance company from a different agent. Like, I'm glad you got multiple quotes and didn't just trust me face value. And theirs was cheaper. And I'm like, oh, well, here's the differences. And I was like, I quoted with this and your policy doesn't have that. You quoted, right? You didn't have water and sewage backup. It didn't have bird utility lines. The coverage for the structure, mine is $50,000 higher. I calculated this and this. So I think you need this much.
There's so many variables.
Right. Well, there weren't very many good photos of the house online. So I did have to do some assumptions about the material and the build quality and stuff. Right. And so at the end of the day, I'm like, now if I adjust for this, my quote's identical. So I quoted you with this higher coverage. I can do the lower coverage. And he loved my auto quote. So he ended up going with me and doing all the lower coverages matched to what the previous agent sent him, which is fine because he's like, well, I like your auto quote. No one else was even close to that. Anyways, it worked out fine. But if not, and I'm like, I've told people, hey, go with that. That quote's better than what I can find. I've had times where I've told people, hey, go call State Farm. I don't represent State Farm. Said, go call them. Where you're living is a higher wildfire risk area. I know that they do better with that than I probably can get. Just get a second opinion just to make sure.
Yep.
They call me back and they're like, you're right. State Farm was $1,000 cheaper than yours. I'm like, sweet, glad you found it. Guess who they're calling in a year when they're shopping their insurance? Guess who they're calling when they're buying another home? Guess who they're calling when they're buying a rental? They're calling me. Guess who they're calling when their 16-year-old, gets added and their rate goes up? Because I want to do what's best for them. I don't care if that means coming to me now, right? Like, anyways.
No, and that's a good point. Yeah. At the end of the day, I think like whether it's insurance or agents. No, really though. I actually love it when people are like, hey, I'm talking to a few agents and I came across you. Like it's like almost like an interview.
Yep.
But I love it because specifically, again, we're more like real estate agents that have niched down in a product called house hacking, right? And so when we talk about, okay, well, here's what we offer versus some competition, like it's night and day. Like you will not find an agent who will help you find, buy, and manage it post-purchase. Like that is the managed part. I've yet to find another agent who will do that. For someone. So, and then if they don't go with us, because being a real estate agent, people typically pick them because it's someone they know, like, and trust. And that's why a lot of people use family.
And you need those three things. You need people that you know, you like, and you trust.
Yeah, bingo. So I totally get why people go that route, and I support it. I would say about 25% of the people I've helped this year, it's not like they fired their agent. They just chose not to use their prior agent because they were able to distinguish the difference between what they got on their prior first-time home buyer purchase to, okay, now that we're doing this a second time and it's a house hack, I need a lot more help and someone who's done this a million times. Yep. So shop around, do your research. Just because they hold a license doesn't mean you'll get the outcome you're looking for.
And it's not just about price too. It's like, oh, well, this agent said they'd do a 2% commission instead of 2.5 or whatever. And it's like, okay, well, I understand price is important, but I've had times where people have come back to me because the service is super important. I've had people that have left me because they like, hey, I found a cheaper rate. Sweet. No problem with it. And then they come back 6 months later or a month later and they're like, I've been trying to add a car for 3 months. I can't get away. Or like, you're right. Just like your situation. It's like, I got an agent I'm using, but they're not responding. And so I'm calling you because I know you're trustworthy. Like, hey, can you run these numbers for me or whatever? And I'm like, yeah, absolutely. And I have people that will come back to me, know it gets more expensive, cancel little insurance because they're like, it's just so convenient. I can call Jacob when I need help, right? He'll answer text messages on Saturday.
Phone is huge. Like the more I've been in this, in any industry, the fact that people just don't pick up their phone or respond. Like, oh my gosh. Like, do you care about your clients?
Care about your clients.
So like, yeah, and every time I've reached out to you, you've been so responsive. And to me, like that is for any partnership I have, whether it's a loan officer or whatever, when I call, if you can't pick up, that's fine. But I expect you to like call me back or text me, tell me like when. But like if it takes me a day or two to hear back from you, it's like, that's just not a good business partnership.
Yeah,
like,
trust goes down.
Like my clients need faster responses.
Yeah, exactly. Especially when you're stressed, right? Like I've had people call me and they're like, hey, I let my friend borrow my car and they got in a car accident. I'm not even nearby. I'm in another state or I'm in Hawaii or whatever. Like, can you figure this out or help me? Yeah, absolutely. Or right.
That's like my biggest fear, actually.
Whatever the situation is, it's good to have people you can trust. And I've had times where I didn't pick up the phone, right? Like if someone called me right now on my personal cell, I wouldn't pick up. And there is someone that did text me, right? But it's like, I'm going to get back to them right afterwards, right? In 10 minutes, I'll be talking to them.
Yeah.
Right. And that's the point. Or they know, everyone knows that works with me. I don't give everyone my personal cell phone number. That's kind of an earlier thing. But I have a lot of agents, the people that have my office's number and right. I've got 8 agents at the office right now. So if someone texted me on my direct office line, they're going to get someone. If someone calls, they're going to get someone right now. Right. Even though I'm in a meeting. Right. And I've had times where I'm on a call and I text the person back, call me back in 5 minutes. I'm finishing another call. Right. No problem with that. But at least give me that. Right. Like, yeah. Taking 2 or 3 days to hear back from someone.
Yeah. And what I like about you too, and just from since I've met you and what we've done is, again, going back to like who you know, like, and trust. So people, of course, want affordability. So when you shop around, they're looking for that number, but pair that with the expertise of like, okay, why is a quote a certain way? What kind of coverage are you getting that justifies the cost, in addition to the fact that you can pick up, you have the team, blend that all together. That's why people choose to work with you.
Yeah.
Because it's overall, again, back to customer journey. It's the best customer journey and experience they will get anywhere else. And that's why they keep coming back and keep referring business. And I think that's what sets insurance agents, real estate agents, or whatever profession you're in. That's what sets you apart.
Yeah. Oh, absolutely. Oh, here's another situation that happens all the time. People are like, I'm closing on this date. 2 days before closing, their mortgage is like, oh, wait, blah, blah, blah. We need to move we moved everything up one day, but we forgot the insurance. And they call me and they're like, hey, it's Friday. We actually aren't closing on Tuesday. We're closing on Monday. And I'm like, it's 3:00 on Friday. Usually when you're changing an entire policy effective date, that has to go through underwriting. And sometimes that can take 2 business days with some carriers, right? I've had situations where I'm like, okay, I'm going to requote this from scratch, rewrite it, cancel the old policy, right? And there's a lot of agents that just wouldn't do that. Like, well, we'll send it. And it's like, sorry. I've seen people have their closings delayed, and it may or may not have been because of their insurance agent, right? I'm not saying, okay, well, sometimes there are things that are unhelpable. Like some of my companies, like Travelers, if you want, that has to go through underwriting, and that's a 3 to 5 day process, right? It could be, I'm going to write a second policy. It might be more expensive or cheaper, right? Whatever. I don't have the same anyways, but yeah, it sucks when something goes wrong and it's like, it feels like, yeah. Anyways, I'll leave it there.
Yeah, no, I feel you. One of the deals I'm working on, it's so interesting. I had one person say, I'll get you an answer tomorrow. And I was kind of like, I wonder how accurate that answer will be. And then I had someone else be like, yeah, it's going to take 7 to 10 days to get you accurate info. So it's hard to know which one is actually true. But you got to work on other people's timelines. But I mean, expectation setting can fix a lot of that.
Managing expectations is really important because people don't know. People don't know if an insurance quote's going to take 10 minutes or 10 days, right? So telling them, hey, here's the truth, is helpful.
Yeah, and I've learned with insurance, I'd rather talk to a human because you're probably going to hate me for this, but like those forms you fill out, oh my gosh, like I want to like punch my computer screen because it's like 10% done. But like, it's like the long, and it has to be long. There's so many variables.
There's things I have to get and it sucks, but like, there's things I don't ask people about at the beginning. Like I'm not asking people about their dogs or their pools or whatnot. I'm just going to quote some assumptions and then, hey, here's the rough estimate. Let's get on a second call and just, hey, here's the other things I didn't ask. Cause I don't want to give you 900 things in the first go. It's like, let's get the 20 important ones. What's your name? What's your date of birth? What's the address? What's your previous address? What car do you drive? What year was the roof replaced on your house? Because every insurance carrier cares about it right now. Like, let's ask those 10 questions, get initial quotes. Okay. The numbers look good. Okay. Tell me about the ownership. Oh, it's owned by an LLC. You have an LLC that operates your home, or you have a trust. Yeah. Okay. The trust makes it a little bit more expensive, or, oh crap, it's an LLC. That insurance company won't take business owned properties. We're going to have to do a different, or whatever, right? It's like, let's figure it out. But yeah, some people are overwhelmed by the numbers. And I appreciate it. I remember because I emailed you and said, hey, here's what I need. And you just called me and you're like, let's do this on the phone.
Yeah. I'm like, oh no.
But, right. I know some people where it's like, you call and it frustrates me to no end where it's like 3 minutes of being on a phone call, just being like, press 1. Okay. You've reached the servicing department. What do you need? Do you need this? Press 6. And then it's been 5 minutes on the phone and I'm just getting more and more angry because I'm like, I want to talk to a person, and that's one thing. Our agency, my promise is I will never have automated systems. It's always going to be ring, get a person. And I'm glad I can do that in insurance, right? Everyone's a licensed agent in my office. Everyone that answers the phone can change your car out, can add your teenage driver, can whatever it is, can get you an insurance quote. Obviously you can always ask for me. That's not a problem, but like you're going to get a real person every time. You're not going to get anything short of that. And that's my promise. And thanks for bringing that up. It's important in insurance too. I mean, as in real estate too. Anyways, we're kind of wrapping up on time. Yeah. Anything that you didn't talk about that you were like, oh, I really wanted to mention this. Just want to leave it there before ending. Yeah.
I'd just say biggest call out, if you want to educate yourself on how to become a homeowner, especially with house hacking, you need to be exposed to the success stories and how people are doing it today. So I guess my call to action would be, if you're on LinkedIn, just look me up, Joel Jones. I share all kinds of data on the Utah housing market, the success stories of our clients, that kind of stuff. It's just easy exposure to like, what does this look like in real life? If you're not on LinkedIn, just go to homelordsystem.com. It will go through the whole house hacking process that Justin and I have created, just A to Z. You can sign up for our newsletter there, or just reach out to us to book a call, which is what most people do, is simply.
And that's homelordsystem.com. Mm-hmm. No S on the end.
No S at the end. Mm-hmm. Okay. Yeah. Perfect. So Homelord, it's a play on homeowner, landlord combined.
Makes sense.
When you house hack,
because you're a home and you've got the rental in the basement or whatever.
You jump into both titles. I love it right away. So just look that up. Most people just like to DM us or book calls to ask questions. And again, we're no pressure kind of agents. We focus on the education, and when you're ready, we're ready.
Awesome.
Pretty straightforward.
I'll put your contact information in the show notes. I'll ask you for it and we'll put it in there. So if you want as well, whatever information there, links to the website, obviously homelordsystem.com will work and be great. It's been awesome. Thank you so much for being on, Joel.
Yeah. Thanks for having me.
It's great. Sweet. See you guys next time. Oh, I always get to do this. If you liked this episode, above me somewhere, there should be a button you can click to watch more Financial Ginger content. So there we go. I said it. I've had people that have messaged me and been like, Jacob, you didn't do your little ending thing. I'm like, okay, there, click here, wherever it is.